Hello out there in cryptocurrency land. Welcome back to Real Crypto, where we take the markets one leg at a time while keeping the market cycle in mind. And today's video, ladies and gentlemen, I want to talk about something that Real Crypto never talks about and usually gets a little bit testy with if people bring it up. Crypto fundamentals. So I have been a proponent of crypto. Well, I've been a proponent of crypto for a long time, but not a proponent of crypto fundamentals. As a matter of fact, I stand by my statement that there are no fundamentals in crypto. And I'm going to qualify that statement and also maybe disprove myself at the same time, so stay tuned, guys. I'm going to start off with the stock market. When people talk about fundamentals, I think many people misuse that term. I hear people say there's a fundamental this for Bitcoin, there's a fundamental that for EOS, there's a fundamental that. I think they're actually misusing the term fundamentals. Back in traditional finance, fundamentals would be a lot of this stuff right here. A lot of these numbers, these metrics that you can use to place value on a company. This is Amazon. Amazon has a market cap of $751.87 billion. All right. It actually has what's called earnings. Those earnings are how much money it makes. And it makes per share over the past 12 months $16.25 for every single share that it has issued. How many shares are there? Well, it has outstanding shares of 501 million shares. Okay, so for each of those 501 million shares, it's made $16.25. And that's shown right here by your income of $8 billion, essentially. Okay, so you can actually derive values based on the sales, based on the shares. These are actual fundamentals. And some of these are actually right here. There's something called a price to earnings ratio, where it takes the price of the stock, which in this case is $1,500 on the nose, $1,500 divided by the earnings per share. Okay, so each share earns $16, and you're paying $1,500 for something that makes $16. So your price to earnings ratio of the trailing 12 months, which is what TTM stands for there, is 92. So essentially, should be 16.25 times, we can do the math here real quick for those of you that want to see it. I don't know, this probably won't come out exact, I don't know. So 1,500.28 times 92.34, 138,000, that seems a little bit disingenuous. Oh, no, we're doing 16.25, excuse me. Getting lost in my own math. $1,500.52, pretty freaking close. So that's what your price to earnings ratio is. This is why crypto has no fundamentals, in my opinion. We don't have any earnings. We have nothing to relate the price off of. So there's price to sales, there's price to book value, there's price to cash per share, price to free cash flow. I don't really look at that too much. Price to earnings to growth. There's all kinds of stuff. They put all kinds. These are more fundamental things over here. These are more technical things over here. So this is a website called FinViz, and it splits things up nicely for the stock market. Now let's think about crypto for a minute. Let's talk about Ethereum. By all accounts, probably one of the more successful blockchains, but it actually doesn't have any earnings. We don't get too much information out of Ethereum. I mean, it is a blockchain. You can go ahead and mine the information if you want to and try to derive some information, but there's really no earnings. The closest thing you can come to in terms of earnings, I'm going to show you right now. Now, this is a website a user pointed out for me the other day on a live stream, blocktivity.info. You can see it here at the top of my screen. This was a pretty cool site, and this got me thinking, hey, look, we have the activity for the blockchain, and if we can go ahead and derive the actual price per transaction, we can quantify that to some kind of a, not really revenue because there's no company, but we can see how much money people are spending on this blockchain. And that's akin to revenue. So if we go back to Amazon, Amazon has income, or where's revenue? Where is revenue? There's revenue on here somewhere. Oh, sales. $220 billion, $221 billion. That's how much sales or revenue that Amazon has. So if you look at this, if you take this real quick, and price, it tells you right there it's 3.4, but you can take this and you can do 220.96 divided by 751.87, and you get a number that is not what I was looking for. So you take 751.87. I always struggle with this. 781 divided by 220.96, you get 3.4. Okay, so that's where this number is derived from, price to sales. So you can derive price from sales. And Amazon with a PE of 92, which by the way, ladies and gentlemen, the S&P 500 has a PE ratio typically of 14. I don't know what it is this second, but historically about 14 is about what it is. We can take a look at some other leading stocks like Apple, which is actually a value stock, has a price to earnings ratio of 11 for the trailing 12 months. That's really low. Let's look at Microsoft. These are the large cap stocks in the market, ladies and gentlemen. 23 for Microsoft. I believe Berkshire Hathaway is next. If you don't know what Berkshire Hathaway is, it's Warren Buffett's company, the third or fourth richest person. 14 PE ratio, pretty much dead on point with the S&P. So as you can see here, the price to earnings ratio is typically in the late teens to early 20s for most companies. Now you have a company with such explosive growth as Amazon, and it's had this 100 PE ratio for a very long time. There's a forward PE. So just for you guys wondering, this is trailing 12 months. So from here back, and this is forward PE. So the next fiscal year. So they're paying 56 next year's earnings and 92 last year's earnings. So there's a little bit of that. But so you can see the typical PE ratio is about 20. Let's just call it 20 for some decent, or even 100 for a very high growth company. All right. Now, but even on Amazon, you can see price to sales is 3.4. Let's see what Apple's is. Price to sales 2.61. Microsoft. Is it going? Oh, there we go. Microsoft price to sales 6.79. That's pretty high. And Berkshire Hathaway. So Berkshire Hathaway is kind of an old fuddy-duddy company, but it's a very, very successful business. 2. Price to sales of essentially 2. So we can say our price to sales, let's just give it like a 4. Let's just give it a 4 for fun. Now we can go back here to our blocktivity.info site, and let's take Ethereum here. 610,428 transactions. Now, I think something's a little bit wrong with this algorithm here. This is the total activity in 24 hours, and this is the total average over 7 days. So I think this is the way it's worded, I think this is average over 7 days, but it's worded like the average total in 7 days. But I'm going to play the benefit of the doubt, and I'm just going to say, let's give it 610,428 transactions per day, right? So that's how many transactions per day. How many days are there? 365. You know, Ethereum never closes. So I'm going to pull this off screen real quick. And we're going to go ahead and go to another website that I actually don't have open. And we're just going to Google it. We're going to Google Ethereum transaction price, transaction fee, right there. I'm going to Google it. I had this up the other day. And we get a nice chart of Ethereum transactions. Let's go all the way here to the right. And we're going to get it, Ethereum average transaction fee. We're going to get it right from there, right from the 0.0872. Let's just call it 0.09. Okay, so we're going to pull this calculator back. We're going to multiply this yearly transaction times 0.09. We get $20,052,559.80. So that is based on today's price, and we can bring, if you want to, we can bring it up to 50 cents. You know what I'm saying? We can bring it up to 50 cents if you want to do an average here, which is this line. But for right now, we'll just stick with this. That's fine. So 20 million. So let's go ahead and give that the price, because we talked about price to sales ratio, right? This, in a sense, would be sales. Every transaction, you can consider that a sale, because there's no earnings with Ethereum, really. There's no earnings. I mean, if you're talking about mining or staking, and I know they're forking to proof to stake here in a little bit, but we're just talking about transactions, fundamentals here. So let's take this and multiply this by our 3. And we get an Ethereum value of $60 million. Let's go take a look at what Ethereum is worth today. $15 billion, $15.6 billion. So this is what the proposed value should be in a traditional large cap growth stock of 60 million, and we're at $15.6 billion. So if you're looking at actual fundamentals of cryptocurrency, in my mind, this is what you would be looking at. So apparently there can be some fundamentals to crypto, but it still says we're insanely overvalued. And when you think about it, it kind of makes a little bit of sense. There's not too much transactions on these networks. They're very immature. No one really knows what to use them for quite yet. Now, I also know you're going to be paying a premium because people think of this as future technology. I mean, it is here today. Ethereum is a live working blockchain, so there's not necessarily a lot of it's not going to change drastically in the future, not to my knowledge from what's on the roadmap. Please correct me in the description below if I'm incorrect on this one. But either way, this is a talk about fundamental value of cryptocurrency and what it's worth. So we can actually take this and divide it by the number of Ethereum here, 104, and you can actually do some quick, easy math, and let's just say it's 120. Let's just call it $2. So the actual value for Ethereum here should be about $2, and it's worth $150. Now, I'm not saying Ethereum is going to go to $2, but I wanted to use this as an exercise because people talk about fundamentals and fundamental this and fundamental that. Ethereum forking is not fundamental. There's no value you can derive from an Ethereum fork. Not yet, at least. Maybe in the future, once the blockchains have matured, we can kind of understand how they may change the blockchain to affect transactional efficiency or something like that, which can go into network capacity and all that jazz. But right now we're talking about simple price value in relation to what is Ethereum bringing in the door. Well, it should be worth about 60 million bucks. And you can extrapolate that as much as you want. I did price to sales of, was it 3 or 4? I forget. Yeah, 3. I did price to sales of 3. If you want to give it 30, it's $600 million. If you want to give it, I mean, in order to get to $15.6 billion, your price to sales would have to be astronomical. I mean, absolutely astronomical. So if you were to do that over 100, you'd still be worth only $200 million on a price. On a price to earnings ratio. So here we talked about the PE. Let's go back to Amazon. Super high growth company. Everyone's actually using Amazon. I mean, like almost literally everyone. 92. They're paying basically 100 times the earnings of this $16 right here. They're paying almost 100 times that to own the stock. I mean, that's a lot of demand for the stock. And so you can see here, crypto, while maybe there are actually some fundamental values to crypto, all right? So we have a little bit. So now we just talked about Ethereum. I'm not going to go into some of these others. We did Bitcoin the other day, and it was worth like 5.5 billion. It's worth 67 on market cap today. But, it was worth 5.5 billion. We did something similar to that. EOS is a free blockchain. In theory, this should be worth nothing. Now, I know there's also going to be some discussions out there about, well, you're paying more than just a transaction. You're paying for security. You're paying for this and that. That's perfectly fine. But I don't know a way to value that yet. And that's the thing when we're talking about fundamentals, ladies and gentlemen. When I'm referring to fundamentals, I think of these quantitative numbers that you can derive. All right, these are the fundamental values for Amazon. We only, to my knowledge, have this one fundamental number for Ethereum, which is activity on the blockchain multiplied by the transaction price. Okay, so and even by that ratio, we're still greatly overvalued. And if you look over here back in January when we spiked at $4, we're still, I don't even know if we would still get to that. So let's do it at $4 just for fun. Let's just say the transactions were about the same. They were probably much higher actually, but just for simplicity's sake. So 1610, 428, what was it, $4? Yeah, about $4. Times 4, $2.4 million. Let's do the same times 100, $244 million. So even at Ethereum's peak, even at the peak of Ethereum, it still wasn't even worth anywhere near where it is today after falling over around 90% or so. So anyway, I'm not here to FUD crypto or anything like that. I'm a crypto YouTuber. I believe in crypto. I trade crypto. I talk about it every single day. And I just wanted to let you guys know maybe there are some fundamentals out there. Maybe there are, but they don't necessarily support values that we have today. I think crypto is fantastic. I think it can do some great things. I think it's still immature technology. But either way, guys, we can still make money while trading the wild swings, which is why we're all here. Let's not fool ourselves. If you guys didn't want to make money in cryptocurrency, I guarantee you 99% of you wouldn't be here. And that's just keeping it real. And this is Real Crypto. Thanks for joining me, guys. If you like the content, please go ahead and hit the subscribe button. If you like it more than that, check out my website at real-crypto.com, where you can check out my Real Crypto Power Hour, where every day you get daily newsletters about charts and technical activities with charts and annotations, a live stream we do every single day, 7 days a week here, and some custom indicators that I put together as well. So thanks for joining me today, guys. I appreciate it, and I'll see you next time.